A very dire environment in terms of what we're seeing on the equities front, and Truworths, one of the best performers, of course, on the top 40 today, even though it was down 0.4%. Let's delve into these numbers, because coming in at headline earnings per share increasing 21%, a good number. It's double-digit growth.
Yes, that is an excellent number. I think better than we're seeing in most industrials or across the market. And really backed off a really solid turnover top-line growth of 13.5%, which is way ahead of the retail sales that we're seeing coming out right now. So Truworths is out there still gaining market share.
What's also quite fascinating, of course, 30-year low interest rates is what we're looking at. Repo rates sitting at 5.5%. A lot of the analysts pushing out their expectations of an interest rate hike into next year. Do you think that this is going to be a perfect scenario for the likes of Truworths to sustain these kind of double-digit numbers that we've been enjoying for quite some time?
I think we may have double-digit, but certainly not that high. They've already announced that the first 7 weeks are only up 10% or just over 10%, and that's significantly lower than what we've seen in the last year. Also, we're expecting the consumer to be quite a lot weaker in the second half of this year. We're seeing inflationary pressures pushing through. We've got electricity, we've got food starting to come through. So definitely the consumer won't be quite as strong now as what they were in this last year.
With regards to share price though, Jeanine, how much good news do you think it's been pricing in? Because again, it's pretty much been the same story over the past couple of years, that these retailers have actually been pricing in good news. And we're starting to see the numbers filtering through, but remains to be seen when we'll see investors offloading these shares.
Yes, I mean, we do think that the prices are pricing in what, quite a good environment, but we also do expect a relatively good environment compared to some other shares. These shares have actually proved to be relatively defensive in a very volatile period. So I think that they are a little expensive, but they're certainly not ridiculously expensive.
Well, would you say, I mean, you mentioned defensive in a volatile period. Just tell us about where you think the South African consumer is going to be headed. You're talking about electricity costs increasing. We're looking at various push factors for the likes of the consumer going forward. Do you think it's going to start being reflected in the likes of Truworths as well? And just overall, the health of the South African economy could actually start going downwards as opposed to increasing momentum?
Yes, I think so. The first half of this year, we still saw retail sales way near 7-8%, and there was one spike in I think it was May. But all in all, we don't expect retail sales to be anywhere near there in the second half, and we would be lucky to see 1 to 2% real growth in the second half of the year. And that would probably mean maybe 5% nominal growth. So that's certainly not as strong as what we saw in the first half of the year, and the consumer is going to show it in not buying quite as much as what they have been buying.
Well, Jeanine, also just looking at the dividend per share, that's up 31%. Do you think that overall, and we've actually seen it from other companies as well, a lot of cash on the balance sheet, and it seems that it's just been given back to investors?
Yes, the two retailers that have an enormous amount of cash on the balance sheet are Mr Price and Truworths, and everybody's been waiting in anticipation to see what they'll actually do with it. I think that they are still looking at investments, but in the meantime, while they're clearly not finalizing these investments, they are releasing a little bit to the shareholders. And it was really gratifying to see that dividend cover came down, and we saw 31% growth in the dividend.
What about an increase in competition, Jeanine? Looking at the fact that Zara could be coming to our shores as well, it has been cited as one of the challenges going forward. What is your view?
Yes, Zara is coming. I think so far I've only heard of one store that's been signed and sealed, and I think that really will be the difficulty. While it may be a great brand, may have great product, and we'll see whether it's priced correctly for the South African market. But I think that the real difficulty for Zara is going to be to open enough stores to really make a difference to the Truworths and Fashini's and the likes. Because getting into the South African property market is really one of the competitive strengths of the South African retailers. When they're sitting with more than 100 stores, it's really difficult to replicate that quickly if you're a foreigner.
So, Jeanine, looking overall at Fashini, Truworths, you mentioned Mr Price as well. Which is your preferred play at this stage? Are you buying? Are you accumulating? Are you selling any of the shares?
I would say that our preferred play is probably Fashini, because we think that there's still some turnaround opportunity there. They're doing a lot in terms of refining their supply chain, and in fact we're starting to see it on the sales growth. They're also growing well ahead of the Stats SA sales numbers, so I think that they're starting to see the benefits of all their hard work.